Hi. Finally, I would like to address buying real estate as an investment. As I stated earlier, even in buying a house as one's residence, there is always an investment component to the purchase. One has to care somewhat about the future value of their residence, if not a lot. When one buys a second dwelling as a possible vacation home, this has even greater investment components to it because the need for a second home is not truly significant. Thus, it needs to be a good economic deal to make it worthwhile to justify its likely underutilization. Everyone needs a place to live. Everyone does need a second place to live. Then we get to the kind of real estate purchases that are entirely for investment purposes. There are two goals that come to mind when investing in real estate. One is for capital appreciation of the market value of the property. To maximize this, one needs to do a ton of research to make sure that they are getting a property with appeal and at great value. The first part is easier than the second part. In investments, there is an old axiom: buy cheap, sell rich. This is true for stocks, bonds, real estate, and all investments in general. So if the intention is to flip a property, which usually means buy a property and sell it shortly after, perhaps fixing it up and making it more appealing, or if the intention is to hold a property for some time, allowing the potential undervalued property to find its true level, one must understand adequately the real estate market in the region that one is looking to invest in. This is true if you are buying a residence or a commercial piece of property like an office building, a warehouse, a strip mall, or wherever business might be conducted. So one must acquire the knowledge of taste and appeal in that region, and it can vary from region to region. Clearly, things like looks and condition, including sturdiness and durability, are very important. Consideration must be given to who the potential buyers might be. Usually the investor will try to make the property more appealing. That may be investing in capital improvements. Looks are very important when selling, so that is always something to keep in mind. Armed with this information, then the challenge is to purchase the property at a price that has profit potential due to capital appreciation. Often if you like a property, others do, and that might inflate the value of the property. There are many great, beautiful properties that sell at high prices, even inflated prices, and such they represent bad investments. So the challenge is to find the undervalued, nice property, a real bargain. Maybe it is even a beat-up property and needs lots of work, and that can be a great investment if one can procure it at a cheap price, because buyers tend to stay away from unattractive looking properties or properties that need lots of work. So you need to have foresight and vision when you look at a property, and not just see what you are looking at, but what the property can become with the right improvements. Figuring the expense necessary to improve the property and make it more appealing is exceedingly important when buying a property for either a quick flip or a slower investment with upside. So your research must include an exhaustive study of recent market activity, paying close attention to details of the sold property, especially the price. That's called getting to know the market. If you are going to successfully invest in real estate, you really got to get to know the market. Now, there is a second prominent theme for investing in real estate, and that is to invest in a property for income, usually in the form of rent. So the analysis, as previously mentioned, needs to be done with special attention paid to the rental market, which includes both what appeals to renters as well as what they might pay. Then one has to crunch the numbers, including purchase price of the property as well as the expenses associated with it immediately upon purchase, and project it out into the future. Then the investor can project future net income, which is future revenues minus future expenses. Finally, after determining this, one must consider alternatives in the fixed income markets, including bank CDs, bonds, T-bills, and alternative sources of income, and decide if one is happy relatively speaking, with the estimated future net income as well as the price paid for the property that will beget this future income stream. Current levels of interest rates figure prominently in this decision. When they are low, like they've been for a good 5 or 6 years, then a lower income stream would be acceptable. But in a higher interest rate environment, then one would want more income to invest in real estate for investment purposes. Simple? Hopefully. Lastly, an investor often has both goals, as the real estate purchase is often a longer-term investment. In that case, the investor wants a good buy to ensure appreciation potential, but realizing that this appreciation might take some time, maybe several years to occur, desires an acceptable net income in the meantime. So in order to invest properly in all types of investments, especially real estate as an investment, intelligent analysis and hard work are required. Let me give you one last piece of advice. Although you may have different investment horizons for investing in real estate, when you buy a property as a residence, I strongly suggest that you have a long-term horizon. Because with two-way transaction costs, buying your residence for a year or two with the intention of moving on is usually wrong. I hope this all helps you. Thank you very much for your time. Take care.